basically we didn't do anything. And then in the next 3 weeks or thereabouts, we spent $40 billion. You can learn it in 4th grade, but it's not what's taught in school. So people who were looking for all these, footprints in the woods and all that is what we're doing. We're just doing it day by day as it comes along. And I think this table kind of illustrates that we spent $40 billion in a hurry there between 3 weeks. And now we're back somewhat in our more lethargic mood. But anything could change at Berkshire. But the one thing that won't change is we will always have a lot of cash on hand. And when I say cash, I don't mean commercial paper. When 2008 and 2009 financial panic came along, we didn't own anybody's commercial paper. We didn't have money market funds. We have treasury bills. And as I may get into a little later, I'll explain to you why we believe in having cash. And there have been a few times in history, and will be more times in history, where if you don't have it, you don't get to play the next day. I mean, it's just it's like oxygen. It's there all the time, but if it disappears for a few minutes, it's all over. So our cash was down on March 31st because, as you saw, we spent that large sum there in that brief period during the quarter, $40 billion. We've committed to buy Allegheny Corp for something over $11 billion. But we will always have a lot of cash. We don't. Some of our companies have bank lines. I don't know why they have the bank lines. We're better than the banks, and we'll give them the money if they need it. But, the local bankers have been calling on them, and they need something to do. Everybody else has bank lines, so it's harmless. But there's no reason for any of our subsidiaries to have bank lines. Berkshire is stronger than the banks. I didn't hear exactly I don't know whether that was a banker screaming or... I don't really like to torture anybody. I mean, and I'm all for banks, and we'll talk about that a little later. Money's kind of an interesting thing. People seem to like to talk to me about it. I mean, they don't ask me how to dance or anything like that, but they do. They ask about money. And so if we'll put up 20-1, it's a photo of a $20 bill. And it says at the top, Federal Reserve notes. Now, we've done all kinds of things with money in this country. It's amazing. The country only a couple hundred years old. The number of different experiments we've made with banks and everything. But we finally just decided to put the Federal Reserve to the issuing of money. And incidentally, I think Rosie Rios, who signed this note, I think she signed more U.S. currency than any other person in history. So if you see Rosie, you cozy up to her. I mean, this is a woman that has issued a lot of currency. But it says this note is legal tender for all debts, public and private. And that makes it money. You can go in our candy store, and if you offer us enough bushels of wheat, we'll probably give you a box of candy. But money is the only thing that the IRS is going to take from you. You're going to offer them all kinds of, you can offer them paintings, you're going to offer them whatever, but this is what settles debts in the United States. And I thought that you'll hear a lot about various kinds of money. This is the only kind of money you're going to see, in my opinion, throughout your lifetime, or even throughout Charlie's lifetime. I mean, it's very interesting because it just says that settle all, legal tender for all debts, public and private, and nothing else says that, except I thought you might be interested in seeing another $20 bill, and this one I own, and on that, it's got the same guy's picture, Andrew Jackson, and everything, and that's a $20 bill, and that $20 bill was issued during my lifetime, and it was done by a bank that Berkshire ended up owning. So you'll see the Illinois National Bank in Buster Rockford, and we bought that bank back in 1969, and if you look down at the bottom of that one, it's signed by a fellow named Eugene Abegg, and we bought it from Eugene Abegg. So we still have some $20 bills that came in sheets, and we can cut them out like paper dolls, and they're our money. The Illinois National Bank issued money. But just remember, the United States government, in effect, said that this became exchangeable for lawful money of the United States. That's what money is. may turn out that it becomes worth dramatically less in purchasing power. It can become almost like paper money, as it has in many countries. But when people tell you that they're issuing new forms of money, this is the only thing that will pay bills under some circumstances. And there were days, a few days in 2008, and we came very close to having a repeat in March 2020. And we had plenty of money on March 20th, but we were not very, very far away from having something that might have been a repeat of 2008 or even worse. And believe me, the Federal Reserve hadn't done what they did, at least in my view, in a very, very, very short period of time. Things could have stopped. And I tipped my hat a couple years ago to Jay Powell for acting as he did. You have to act with speed. In the old days, when you had runs on banks, back in the 19th century, a line formed, when the bank would go broke. But the fellow would pay out as slowly as possible, hoping something would happen. A Wells Fargo truck or a stagecoach would pull up with a bunch of gold or something, and you'd sweet talk the people into the line dispersing. In Omaha, in August of 1931, 4 state banks, so-called state banks, they had in that day, they closed, and the national banks didn't. But they were all broke as of that day. No bank can pay off in one day all of its liabilities. But the Federal Reserve is the only one that's good at that time. But I will tell you this, Berkshire Hathaway will be there at that time. But the Federal Reserve is not gone. And the Federal Reserve in the United States can do whatever is necessary. They've got all kinds of rules about can do this or that and this and that. And one time in the 1980s, Paul Volcker, who was a very honest man, said to me, and I said, what are the limits of what you can do? And he was a very unusual guy and huge, looked down at me and said, we can do whatever we need to do. And that's true, and that's what happened in 2008 and 9, and that's what happened in 2020, and you'll hope it happens again next time, but you want to be there and in a position to operate if the economy stops, and that can always happen.
My question is, how do you time the big market moves so well?
The interesting thing is, obviously, we haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know. And the interesting thing is, sometimes I get some credit someplace for the fact that, how wonderful it was that we were optimistic in 2008 and when everybody was down on stocks and all that sort of thing. We spent a big percentage of our net worth at a very dumb time. I shouldn't say we, it's I. We spent about $15 or $16 billion, which was a lot bigger to us then than it is now. We spent it in the last few weeks, a period of 3 or 4 weeks between Wrigley and Goldman Sachs and General, at a terrible time, as it turned out. I mean, I didn't know whether it was going to be a good time or a bad time, but it was a really dumb time. And I wrote an article for the New York Times and Buy America and all these things. Well, if I'd had any sense of timing and waited 6 months until, I think the low was in March, and in fact, I think I was on CNBC maybe that day or something, but I totally missed that opportunity. I totally missed, in March of 2020. We have not been good at timing. We've been reasonably good at figuring out when we were getting enough for our money. And we had no idea when we bought anything. Well, we always hoped it would go down for a while so we could buy more. And we hoped even after we were done buying and ran out of money that if it was cheap, the company would keep buying, in effect taking our interest up. I mean, that's stuff you could learn it in fourth grade, but it's not what's taught in school. And I mean, so never give us any credit. Well, actually give us all the credit. I mean, go out and tell everybody how smart we are, but we aren't. We haven't ever timed anything. We've never figured out insights into the economy. When I was 11 years old, March 12th, I guess, 1942, March 11th, I bought stock when the Dow was 99 at the end of the day, I think. And, now it's 34,000 or maybe it's 1,000 less than it was on Thursday. But I just, it's one decision. It's a good thing to own American business. And, if the Harvard endowment had come to see me and it's 11-year-old, or General Motors pension fund or something, and they say, well, no, but we have to have a balance and we have to maybe have 60%, and then we have to sit around every 3 months and listen to a bunch of managers. It was just done better if they just taken some darts and thrown them and just said, we're going to be in America 50 years from now and 100 years from now, and we'll do better in stocks than we will in bonds. It's amazing how hard people make what a simple game it is. But of course, if they told everybody what a simple game it was, then 90% of the income or more of the people that were speaking would disappear. So it's really a little too much of us to expect of human nature that people will explain why they really aren't adding any value to what you can do by yourself. Or actually, I hate to use the example, but you can't have monkeys throwing darts at the page and take away the management fees and everything. I'll bet on the monkeys, but I don't consider them a superior species, and I don't want them to move next door instead of my next door neighbor or anything. But that is the way it's just the way it has to be. Charlie, do you have anything cheerful to say?
Well, frequently in the wealth advisory business, the way it used to be, you go to your investment advisor and you say, what should I do to protect myself for the future? And he says, why don't you give me $50,000 of your net worth now? That's my contribution to your future. It's a peculiar business.
Yeah, it's a great place to go rich. It's still, if you have a son or daughter that really wants to make money per point of IQ and per erg of energy and all of that, go to Wall Street.